Hi there, welcome to Kneppy Invest and welcome to the 20th of May 2024. An absolutely amazing day on the ASX. Maybe I'm being a little bit dramatic saying that because the XGO is only up 0.66%. But have a look at commodities. Resources is up 2.14%. I sort of hinted at this in my technical update video because Friday saw pretty stellar days for silver and copper. I think even gold had a pretty good day, and that has translated to the Australian market. And that's the major reason why we have had a good day. Tech is only up 0.21%. So mostly, and I am projecting here, mostly it's the mining companies that have lifted the ASX today. Now, we can verify that just by having a look at what has happened or how the other sectors indices have performed. But I'll leave that for a few minutes. Now, the agenda for today's video, and the reason why I think today is an absolutely amazing day is just the plethora of announcements that were released. Now, I do have a top five. I did cheat a little bit because there were a few announcements released after I recorded the video on Friday. And I'll talk about those announcements. Then I will also have a look at the top five announcements of the day. And there's about 9 companies who did not make it into the top 5. Now, all the companies that did make it into the top 5, I have a feeling are up over 10%. In fact, a few of them might be up over 20%, maybe one up over 25%. Remains to be seen. So some positive announcements being released on the market today. In particular, a couple of really good trading updates and profit upgrades. So we do that. And if I have time, maybe a chart or two. I'm timing this video, and I do want to do or complete these videos within 30 minutes. I might have a little bit of difficulty today because not only do I want to touch upon the top 5, also want to maybe mention some of the audible mentions briefly. And first, I also want to have a look at some tweets. So let's have a look at some tweets right now. The first one is this one. This is some of the earnings releases in the American market over the next week. And the whole reason I want to bring you this particular tweet from Earnings Whispers is because probably the most anticipated earnings for the quarter will be released on Wednesday after close. That's NVIDIA. Snowflake is also releasing their results. Share price of that company has been down. Notice James Hardie's on this list. There you go, James Hardie releasing their results after close on Monday. So that's probably open here on Tuesday. Yeah. Zoom's releasing their results. What else do we have here? Lowe's, Macy's, Urban Outfitters. No idea what that is. TJX, Target, Elf, company called Elf, and Ralph Lauren, Intuit, Mesa Labs. Only one company releasing their results on Friday, looks like. Or maybe there's two. Company with ticker code BAH. Anyway, so that's an interesting week, just because NVIDIA, and who knows how the market is going to respond to those results. If it beats expectations, maybe another 10 or 20% up. If it doesn't beat expectations, share price could drop 10, 20%. Who knows? No idea. From bar chart, this is a quote from Peter Lynch. Far more money has been lost by investors preparing for corrections or trying to anticipate corrections that has been lost in corrections themselves. And possibly this is, no, strategists were gloomy about the prospects for the stock market going into 2023. And I'd say so far they have been wrong. And it has happened quite often over the past few years where we have these bears, permanent bears, I suppose you could call them, and they have always putting out, I'm thinking of Stephen Van Meter, always putting out YouTube videos about how the market's going to collapse, and it never does. Eventually, he's going to be right, but meanwhile, he's probably lost not lost money, but there's an opportunity cost of being bear. Another tweet from bar chart. This was not on purpose. Over the past 5, this is a bit of a take on bit of a what's it called? What's the word called? A bit of a burn on Cathie Wood. Over the last 5 years, investing in the NASDAQ would have generated a return of 158%. Investing in Cathie Wood's ARK Invest would have brought home gains of 9%. There was a period of time when Cathie Wood's ARK Invest did really well, but not during the past few years because most of the companies she invests in, I'd say most of them are not profit-making companies. They're just, a lot of them are just story stocks. What is this one? Oh, Patient Investor. This is actually an interesting one. I would like to verify this because I just don't want to believe everything I read, but Amazon, Google, Meta, Microsoft, and Nvidia grew earning 64% in the first quarter. And I'm going to admit I own all 5 of those companies for a reason. And my most recent purchase was Meta. I bought on a little bit of a dip. Share price has recovered. Anyway, they grew earnings 64% in the first quarter. The other 495, suppose this is the S&P 500, yes, S&P 500, declined by 6%. So just there, those big companies, and all these companies are in AI, they are growing. They're still growing quite quickly. A lot of that would have been helped by NVIDIA or NVIDIA. I always have to say NVIDIA because that's how you pronounce it, not NVIDIA. NVIDIA. Pretty sure that's how you pronounce it. Anyway, that's all I want to mention in bookmarks. I noticed Iran is trending. So apparently the Prime Minister or Premier of Iran has been killed in a helicopter crash. And I hope there's no conspiracy theories that it was shot down by Israeli. I don't know why Mossad is trending as well. Interesting. 1 million posts on Iran today. Jamal Murray is also trending because Denver has been beaten by Minnesota Timberwolves. Actually, really excited by that, but it does look like Boston Celtics. Because I think Boston Celtics' only competitor was Denver Nuggets, but I am going on a tangent right now, and I'd love to see Minnesota Timberwolves win. Anyway, let's have a look at the market today. I've already hinted that's been a really good day for resources. So let's have a look at the different, indices and sectors. So straight away, materials up 1.96%, energy up 1.91%. So for those investors who are highly invested in mining companies, you've had a great day. Gold up 3.67%, and the ASX 200 resources up 2.13%. IT's had a good day, up 0.6%, while not so quite a good day for industrials, staples, real estate, and health care. So let's have a look at the ASX 20, and I would assume that most of the best performing companies are mining companies on the ASX. Maybe not all of them, but most of them are. Let's have a look. Rio Tinto, Aristocrat, the positive results that keep flowing through from that company. So the market got that really wrong. So sometimes the market gets wrong, even on these big companies. And then we have BHP, QB Insurance, Fortescue, Santos, Macquarie Group, Woodside. So quite a few energy and mining companies in that list. And also, I'm just going to have a look at the 200 resources, the XJR, just to see if they do have a list of companies in this. No, they don't. There you go. So now let's have a look. Yeah, Aussie miners set to benefit from tighter US tariffs. Let's have a look at the best performing companies and the worst performing companies today. And then we'll have a look at some of the announcements, starting with the Friday announcements. A few negative ones there, one positive one. And then we have a look at those really good announcements that were released today and the top 5 announcements on Monday. So top gainers. And if you have no idea which 5 of these companies are going to be, you will soon see these 5 companies, or at least 4 of them, I'm assuming. So this is top gainers by change. So a lot of these companies have a small market cap. Osgold has a market cap of 85 million, up 42.31%. Now I'm not going to focus on any of these companies. And there we have Global Data Center Group up 25%. I actually did not expect that to be the best performing company out of my top 5 announcements. I actually expected maybe Nuix or even Gentrack to be there. See Gentrack there also. So global data center up 25%. And I'm going to mention something here. And this is really important. And maybe I should have started with this. Luck. We have to embrace luck sometimes. I bought Global Data Center on a Thursday. And this was more of a long-term trend, a long-term play. And It was just luck that suddenly today they've released an announcement which has seen share price rise 25%. Nothing, no skill, just luck with timing. And I think we have to embrace luck because a lot of us will focus on being unlucky. And you'll see this a lot with sport. Um, so if you do follow any sport and you look at any sort of sporting forum, individual company sporting forums, they always complain about the officiating. That's why we lost, that sort of thing. And more than likely, it's not the reason they lost. And as investors, sometimes we think we might be unlucky that something has gone against us, but we should be embracing whenever something has gone for us, like Global Data Center has gone for me up 25% on a good news release. And we'll talk about that later. I think we have to embrace that and just not. And probably the other thing I should say is also position ourselves where we're more likely to be lucky in the future. And that's why another reason why I'm using technical analysis. And you'll see why I'll talk about why I took a position in Global Data Center, not only because data centers, but also because of the chart. And Nuix, look at the chart for Nuix, the market like that company. Look at the chart for Gentrack. These companies release really good announcements, but just look at the chart. Now, on the flip side, when a company releases a negative announcement, look at the chart. Doesn't always happen, but look at the chart. So you can position yourself to be lucky in the future by buying these companies that are in uptrends. And that's why I think you can increase how lucky you are in the future by technical analysis. So yeah, so Global Data Center, Nuix, Gentrack are number one, number two, number three on my top 5 announcements of the day. The other two I'm not seeing right here. AML3D, I did have a look at that announcement. They did release something interesting, up 17.8%. And there it is, Star Entertainment Group, coming in number 4 on my top 5 announcements, up 17.8. On another day, that could have been the number 1 announcement of the day. And the other company is not there. But maybe if we rank this by market cap, it will be here. Silver Mines, not surprising, Silver Mines is up. Silver had a really good day, so that's up 9.2%. I think I even mentioned Silver Mines in my technical update video yesterday. I just couldn't remember the name, I think. And there's PointsBet. There it is. Coming in number 5, we have PointsBet up 10%. We'll say 10%, even though it's 9.9%. I would never think I would include PointsBet in my top 5 announcements, but they did release an upgrade. Can you believe it? An upgrade. So a really good day on the market for some investors. There's another company, Australian Gold and Copper, keeps on moving. That company, I think it's the same company, has just gone on a massive run over the last few days, trading days. Look at that. The last 5 trading days share price has gone from below 10 cents to 32 cents. And I have not been on that ride at all. Okay, so let's have a look at the worst performing companies today. And none of these companies will be in the top 5 announcements. A few of these will be, or we'll talk about a few of these companies because, well, there's Vectus Biosystems. That did make it into my honorable mentions, unfortunately. And this is probably a sad one because the CEO of Vectus Biosystems actually passed away. So that's unfortunate. On the odd occasion, you will see this happen when the CEO, because a lot of CEOs actually, they're experienced. Most CEOs are highly experienced. They've worked many, many years, and they tend to be a little bit older. So on occasion, you will see an announcement that a CEO has unfortunately passed away. I think she was also the founder of the company as well, and she was highly respected in her field. Michael Hill International Jewelers, down 20%. On another day, this would have definitely made it in the top 5 announcements, although this was a Friday release. So I will talk about that company. And let's have a look by market cap. Vulcan Energy. So I did take profits with Vulcan Energy on open this morning, sold at $5.41 just after open. I put in a sell bid at $5.41, and I believe the trading began at $5.40, and within seconds my bid was hit, and then the share price started falling. I'm not surprised because the share price had run up. I think I've mentioned this. Whenever I see a share price accelerate or grow exponentially like Vulcan Energy, I get not nervous, but I'm more willing to take profits. I'm glad I sold out of Main Pharma, 10.5%. Core Lithium, down 6%. They did announce the new CEO. There's Michael Hill Jewelers. Duratec did make it into my honorable mentions. AV Jennings made it to my honorable mentions. And there's one company not here. Oh, God, that's because their share price movement happened on Friday in the last 30 minutes. There's Titomic. I'm keeping an eye on Titomic as a potential trade in the future. I want the share price to fall more towards 7 cents, not 8.9 cents. Okay, so let's have a look at the announcements today. Already halfway through this video, 15 minutes. So it's definitely not going to be a 30-minute video because I do want to talk about some of these companies. And let's start with Friday's announcements. So actually, what I'll do is I'll just show you the announcements last Friday. Cool. Announcements. They used to make this much easier to look at announcements like I do here. And if we go back to last Friday, and we'll just click on market sensitive announcements. Just take your time, ComSec. We're in no rush. Now, there we go. So 61 price sensitive announcements. So I started recording this video, or last Friday's video, at about 3 p.m. or something like that. And all these really interesting announcements were released after I started recording. Now, there was a company I noticed, and I noticed this this morning. A company called Sietel, ticker code SSL, released a half-yearly report and accounts. I actually did have a look at that company. I always have a look at half-yearly reports. The company is actually profitable and grew their revenue quite impressively. And then there were a few things that I really were turned off by what they do. They're sort of like an investment company. They also have a sort of a car body repair company on the side or something. But the thing and I'll just have a look at the results here. So revenue up 29% to 8.3 million. Profit up 101% to 1.2 million. Market cap is about 70 million or so. But I then had a look at the company itself in terms of trading, and I went, nah, not even interested. And the reason I say that is if you look at the trade history, only on 6 days this year have shares been traded in this company. 4 of those days have been in April. So no trades in February, no trades in March. So there was a period of time here, over a 2-month period, where no shares in this company were traded. And if you look at the trade history, it fits on one page for the whole year. So in ComSec, the trade history is just for the last year, and it fits on one page. Share price has increased by, well, that's 15% or so from this time last year. In fact, the first trade in the past year was 19th of July. So that's, 2-month period there where there was no trading. You'll probably see that a lot. So no interest in Sietel. What they do, they mentioned here real estate. Seems like they were more of an investment type company. But I did have a look at it, but moving on. So spending too much time on that company. Now, on to the interesting announcement. So at 3:30 p.m., completely missed this until this morning, when I looked at Data's chart, and I went, why did the share price of Data fall 12% on Friday? Because they released a market update at 3:30 p.m. Completely missed it. So that's just around the time I finished recording the video. And I suppose you have to say this announcement was negative. Share price fell, what was it, 12% or so? And it's funny because when you do start reading this, it doesn't sound that negative. So they use the word pleased. So Data is pleased that we're giving you this negative update. Bad use of words, in my opinion. Please should not be used when it's a negative update. And then they go on in the commentary bit. The company performed well. Okay, despite facing a subdued market. So I thought, I'm not sure why the market has negatively reacted to these results or this trading update. And then bang, here it is. So gross revenue down 10%, statutory revenue down %, EBITDA flat, net operating profit before tax down 5%, net profit before tax down 3%. So the market didn't like it, and hence the share price has dropped. And here's another case of me trying to trade this. Share price dropped on the founder selling, which might have been a harbinger of what was to come. He sold I think it was because of a divorce, but maybe there was other issue or other reasons, and he was just using divorce as a reason to take some profits. So on that day, share price fell 10%, and I didn't see it bounce. I was expecting a bounce, and we didn't see it. And the share price started to drift lower. So I took a small loss with my trading position in Dicker Data, and very happy about that. Share price down another 2.5% after falling, what was it, 13% on Friday, or in the last 30 minutes of trading. Actually, it would have been the last 20 minutes of trading, maybe 15 minutes of trading. Well, I'm forgetting if a company does go into, because when a company releases a price sensitive announcements during normal trading hours, the company automatically goes into a trading halt for either 10 or 15 minutes. I forget what. So if they release it at 3:30, trading would have began about 3:40 to 3:45. So the share price fell, what was it, 13% in that 10 to 15 minutes, plus the closing auction, and share price has fallen again. So just looking at this chart, I have no interest in Dicker Data. It is negative right now. Okay, so let's move on to the next announcement on Friday that caused a bit of interest today. And this is from Michael Hill International Jewelers. Trading update released at 5:19 p.m. Now, I actually did have a look at this as well, and I didn't see as much negativity in the numbers, but it was just the language. And what I mean by language, and I'll just compare the numbers and actually look at the numbers first. So Australia segment up 10%. Canada segment up 0.5%. New Zealand down 10.3%. But you would expect New Zealand to be a smaller market. That's what I'm assuming. But overall sales up 4%. So if you just look at the numbers, maybe not that negative. But then you look at the language. Positive sales momentum had been expected through the second half in line with anticipated improvements in consumer sentiment and economic conditions. Unfortunately, this has not materialized, with second half sales performance broadly in line with the first half and margins still under pressure. So the numbers look okay, but again, it's all about expectations. They were expecting better numbers than what they provided, and that's why the market has punished this company today. Share price down 20%. But again, as I've mentioned earlier in the video, we can improve our luck by discarding companies like Michael Hill Jewelers, because the share price of this company has been in a downtrend. So look at it. Why would you be a shareholder of this company? Just by looking at the chart. You might think there's value, but the market is telling you something. The market is still just continually selling shares in this company. The market thinks this company, even though it's cheaper or lower, the share price lower than it was a few years ago, significantly lower, the market doesn't think there's any value in this company yet. And the company releases a negative trading update, share price dropping 21% in 1 day. Now let's have a look at the weekly chart. And yeah, share price has a lot to go before it gets to the COVID-19 lows, which were under 25 cents. And even then, you can see this massive downtrend in the share price of this company. Share price went into an uptrend. Now it's in a downtrend. So no reason, in my opinion, to get excited about this company just yet, because there's a lot of negative sentiment around Michael Hill. I always want to say Jewelers. That's why it's MHJ, but Michael Hill International Limited. I did trade this company, Michael Limited, back in 2021, 2022. Made a small, actually pretty good profit, I suppose. And then Telix Pharmaceuticals, I did tweet this. I think this company and the success of Telix Pharmaceuticals is really underappreciated and even underrated by the Australian investing community. This company has a market cap of $5 billion, is it? $5 billion. Share price up 3.5%. They did release their financial performance. So let's just have a quick look at this company's financial performance. Now, this would not have made it on my top 5 announcements, but I do think this company needs to be talked about a little bit more. So let's have a look at their quarter numbers. This is 1 quarter. Revenue of 175 million. And this is not a surprise. They hinted at these numbers a few months ago, or maybe a month ago. So revenue 175 million, up 75%. So again, $175 million of revenue in 1 quarter, up 75%. Gross profit, $115 million, up 84%. Operating profit, $28.5 million, up from a $5.6 million operating loss in the previous corresponding period, and closing cash balance of $122.7 million. So if you just analyze that operating profit, so that's like $100 million operating profit for the year, and I can guarantee you this company could be way more profitable by decreasing spending on research and development and stuff like that. But because they're just growing so rapidly, I think they're taking advantage of that, and the market likes this company. And this was to be expected just by looking at the chart. Let's have a look at the chart. And Telix Pharmaceuticals has been in an uptrend. In fact, this is the weekly chart. It's been an uptrend forever, and maybe not forever, because it only goes back to 2017 when they listed. And this is their chart. Funny enough, the share price was down today. Wonder why that was so. Let's have a look at the 1 minute chart for Telix. The market opened down. No, it opened up high. There was a high of the day, and the share price just collapsed in the first 20 minutes. It went from 1540 down to 1440 and has stabilized. I'm not sure what was happening there. You can actually see these waves, decreasing waves as we go through time. So the volatility has been decreasing through the day. And I say just by looking at this 1 minute chart that overall this was the market appreciated these results. But for some reason, someone didn't like it and they sold off during that first 20 minutes of trading. Okay, so that's Friday's announcement. Some pretty good ones being released, or one pretty good one being released by Telix Pharmaceuticals, two really negative ones by Dicker Data and Michael Hill International. So I'm going to briefly talk about some of the announcements that were released today that did not make it into the top 5. So I'll start with Duratec. They did release, I did tweet this one, they did release a business update. It wasn't really a profit upgrade. They did have a profit range, and they just narrowed it down. So what sort of a revised upgrade, revised guidance, but they did downgrade revenue, but their margins, I think, were towards the upper end of their previous guidance. That's actually a good sign. I like to see that. I like to see higher than expected margins or better margins than maybe they could have had. But I think just the revenue downgrade has slightly spooked the market. Share price down 4.5%. I also mentioned in that tweet that I think this could be attractively valued at current valuations. PE ratio, what was it? Probably 12? Yeah, 12. There you go. And a dividend yield of 4.1%. But just the market, for some reason, is a little bit negative about this company. And I think it's just the margins. Just the margins. Findi has gone into a trading halt. Now, based off this trading halt, something to do with the results. Yeah, results. Very rarely see a company go into a trading halt and indicated price is up. So I think the market thinks this is going to be a positive one. So trading halt in regards to the release of their financial statements. I've very rarely seen this. And this, I wouldn't say it's the first time, but I'm trying to remember another time I've seen this. So the trading halt is requested, a pending announcement by the company to the market in relation to an update on the company's financial year 24 financial results. So I don't know. I could see it going both ways. The results are really, really good, or results are really, really disappointing. Now, based off what happened with the market on Friday, I think potentially there was some loose lips, or fears there was some loose lips, because the share price of Findi did rally about 5.6%. But share price of this company has been really volatile the last few months. I did take some profits, but I'm still holding a portion of this company because at one point in time, this was my largest holding, and I was not comfortable having this company as my largest holdings because it went on a massive run over the past, not even year, over the past 8 or 9 months. So that's Findi. Next one, honorable mentions, we have Vectus Biosystems, and it's in the announcement, passing of Vectus CEO, share price down 35%. I don't think we have to linger on that. Not really, even when she was in charge, or the CEO. I don't think this was an investable company because the share price was in a downtrend, but this is just a little bit more negativity on this company. Next company that made it into the honorable mentions was Pact Group. Pact Group actually did release a trading update, but there is a takeover bid for this company. Don't care. In fact, in this takeover offer for Pact Group lettered shareholders, the management said, well, the takeover bid is 84 cents, and sometimes it's trading at 84.5 cents. Shareholders, you should sell at 84.5 cents because if this takeover bid goes through, you'll be selling your shares at 84 cents, or you'll be getting 84 cents. So why not sell at 84.5 shares? That's actually what they said, sort of in the announcement. This takeover offer for Pact Group led as shareholders, just open up for you to show you that I'm not joking. So this is what they said. I don't know, where is it? Since my last letter, Pact shares have traded on ASX at a volume-weighted average price of 84.5 cents, which is modestly above 84 cents. Well, I'm not sure modestly is the right word. If this persists in the lead up to the close of revised offer on the 7th of June and there is sufficient liquidity available, shareholders may need to carefully consider if selling on market after brokerage and other costs might achieve a better outcome than accepting the revised offer of 84 cents. So it's really interesting why anyone would be buying at 84.5 cents, when possibly, if the takeover goes through, they'll be getting 84 cents for their shares. And if you have a look at the summary traded here, 111 million shares being bought at 84 cents. More than likely, that's the company taking them over, I'm assuming. I'm assuming that's the company taking them over. So just sell on market at 84 cents. But people have still been buying at 84.5 cents. Yeah, there's one share traded at 84. Yeah, 80, people buying at 84.5 cents. Don't understand at all. Then we have Elders release the half-year results. This definitely would have made it into top 5 on any other day. Share price up 1.3%. Underlying numbers really weak, so everything down. But I think the market really expected that because Elders did release a negative trading update. And I think a lot of people are buoyant about Elders and agriculture because we are possibly heading into a La Nina, and that could be beneficial for companies like Elders. Then we have a company called Avada, a company I'll probably never own. Share price has not moved today. Now, they released a fairly negative trading update and a significant decrease in EBITDA, something like by 25 to 30%. But the shares in this company are liquidly traded. Not the sort of company I would ever own. They're like a traffic management company. So they have hired people who have the lollipop people, whatever. So no interest in Avada. And you can just have a look at the chart for Avada. In fact, let's have a look at Elders first quickly. Oh, actually, Elders has bounced today. That's pretty nice. And what was the other company? Avada. Avada is just all over the place. No interest in this company, even by the chart. Yeah, so highly liquid. Maybe not highly liquid. It is a liquid. And you can see that just by this. There's only 3 buyers willing to buy shares in this company right now. And that's made worse by this negative trading update today. Exacerbated. That's the word I should have used. And what else do we have? So Core Lithium have got a new CEO, but the market didn't like it. So I don't know if this is the market not liking it, down 6%. Maybe it's just noise. AV Jennings down 7.5% on announcement of a termination of option. So the market didn't like that. So let's have a look at the charts for both of those companies. Core Lithium is still in a downtrend, no end in sight, really. Still down towards the lows we have seen. And AVG Jennings, I'm pretty sure this is a home builder, could be completely wrong. And yeah, no interest in this company just by looking at the chart as well. And finally, I just want to show you a Alpha 4N. Probably don't have to show you this because the shares in this company are suspended. Stage 2, compelling DFS underpins FID and equity raising. This company has a market cap about $1 billion, yeah, just under $1 billion. And this is high purity alumina, that sort of thing. But there's a few companies on the ASX, I believe, are in this area. High purity, and this is really high purity alumina. And this goes to your phones, I believe, screens for phones, something like this. And it's just really interesting. So the market cap of this company is like 933 million. I'm not sure about the debt, but they're just talking about annual steady state revenue of between 360 and 500 million. Annual steady state EBITDA of between 255 and 400 million, which is intriguing. Updated capex expenditure of 553 million. So there's a lot of money, but they do expect first production in the first half of financial year 27. So a long way from first production, and more than likely, I'd say they're going to miss first production, and they might miss it by 1 or 2 years. So initially, I was intrigued by this company, and then I saw that and went, maybe not just yet. But the chart has been looking good on occasion. Alpha HPA, high purity alumina, HPA. So yeah, no interest in this chart either. Okay, so that's the honorable mentions of the day. Now let's get to the top 5 announcements of Monday. So this video is now up to 35 minutes, so going a little bit longer, but I think this was an interesting day, including some announcements released on Friday. So let's have a look at the number 5 announcement of the day. PointsBet up 10.99%. So looks like all our companies on today's top 5 announcements are up by more than 10%. And PointsBet bought what I want to see. Upgrade in their announcement title, upgrade of financial year 24 EBITDA guidance. So as soon as I saw that, I went, this is going to be positive because it's got the word upgrade in it. Some of the companies will just put financial year 24 EBITDA guidance update or something like that. I like to see the positive announcements have positive words in the title. That's just me. Now, in saying it's positive or this is an upgrade, they're still expecting a loss, but not quite as bad as a loss. So upgrades expected normalized EBITDA loss in the range of 4 to 6 million, an improvement on the previous financial year 24 guidance of loss in the range of 9 to 14 million. So it is an improvement, and you just note that financial year 23 normalized EBITDA loss was $49 million. Now, the market has liked this, but again, when you do look at the chart, you notice there's a big drop in share price because there was a capital return. I think this company has given 2 capital returns to their shareholders because they sold out of their American business. But if you do use TradingView, you can adjust it for capital returns. There it is. This is the chart of PointsBet if you take into consideration the capital returns. And the chart actually doesn't look that bad in this perspective, under this perspective. In fact, you could say the share price is in a really gradual uptrend. Now, a little bit of selling today based off this. So it looks like the share price could have risen by over 20%. So we could have had almost all our companies up 20% on the announcements today if there wasn't selling in PointsBet. But it looks like some people have been taking their profits in the company. So congratulations to shareholders, although 10.99%, you might be wanting more, particularly if you're a long-term shareholder of the company. Now, coming in number 2, or number 4, not number 2, can you hear myself? Star Entertainment Group, not this sort of announcement that would make me rush to buy shares. Response to media articles, this is in relation to a potential takeover bid or maybe rumors of takeover bids. And they did confirm that they have not received a proposal directly from Hard Rock Hotels and Casinos. However, the company has received inbound interest from a number of other external parties regarding potential transactions. I think the reason behind that is these other casino places, hotels and casinos, are possibly seeing some value. And I think a few viewers of this channel, because it has been raised, this company has been raised by a few viewers, are seeing value in this company. I just want to see some sort of market, some sort of response from the market, some sort of shift in sentiment. Possibly this will be the beginning in the shift in sentiment of the company. Not sure why the company share price has rallied to this number, 53 cents. Is that what maybe the rumors are suggesting a takeover bid might be made at? I have no idea. And for that reason alone, I don't usually buy on announcements of potential takeover bids. So let's have a look at the chart for SGR. And remember I said that a lot of times when the share price is a downtrend, the market is telling you something. But sometimes the share price gets so low and the market overreacts to such a point that there is value, and other companies, other institutions, other fund managers also see that value. And that's when you get takeover bids or potential takeover bids for companies like this. There is possible value. And maybe this is the turnaround, and maybe the share price low has been reached for Star Entertainment Group, which will be around about 38 cents. But still, share price in the downtrend, according to this. But maybe this is it. Maybe this is the time to start thinking about Star Entertainment Group. But not for me at this point, just not for me. So that's coming in number 4. Coming in at number 3, we have the whole reason when I went on this luck talk is global data centers. I bought some shares last Thursday, not expecting share price to be up 21%. So share price has been a little bit volatile today, which is understandable. And the whole reason why the share price is up is because they made another divestment. They divested some Perth data centers a few weeks ago. This is a divestment of their biggest investment, Etix Everywhere, which is a European data center group. And I think they have data centers, maybe France, Germany, that area. But they're selling their holding or their investment in Etix Everywhere for 175 million, which is interesting because they valued Etix Everywhere significantly lower. So they got, I wouldn't say, they got a premium to their valuation of this investment. So here it is. So a 52% increase on the 115 million carrying value of the Etix investment. Now, 175 million was the markup of this company before the share price has increased. And even after the share price increasing 20 to 25% today, the company is still, in my opinion, based off the assets they have remaining, is undervalued. So I'm not going to sure what I'm going to do with this 175 million. And if one of the other assets possibly is being sold as well, the air trunk is being sold as well. So at this point in time, I'm going to keep my holding in this company because I do think there's a flaw on the share price because they're getting this 175 million more than likely, and then they have these other assets. So equating to $2.26 per security, that's 175 million. So again, the share price of Global Data Centers is 282. So the rest of the company is priced at, was that 46 cents, which doesn't seem 46 cents, 56 cents. It doesn't seem like that's too much for the other parts of the business. And in one of their presentations, you can go, I think it could be the half year results. They do put a valuation on the whole business or all their investments. I think they do it in this slide. Yep, here it is. So net asset value. So Etix was valued at 115 million. They've sold it for 175 million. Malaga valued at 15 million. Air Trunk at 48.5 million, and cash and other net assets at 6.5 million. So straight away, 63 million. So $70 million other assets now, 175 million. So 245 million is a fair value of the company right now as a market cap. So let's have a look at Trading View. So let's put it in GDC. 245 million is a market cap. 245 million, no, 224 million. Now I think there's a little bit of discount to the valuation of the company because of a risk that possibly this divestment does not follow through. But I think there is definitely an argument to say Global Data Center right now, the market cap of 224 million is undervalued. That's at a share price of 290. Now the share price is 282. So even better value right now. And I'm not sure. I don't have my pulse on this company enough to know what they're going to do with 135 million. If it's going to be a capital return to shareholders, I more than likely will get out before then for reasons. I don't like capital returns. Just don't like it. So that's our Global Data Center coming in at number 3. Now, quite controversial. This company could have come in at number 1. But there's a reason why I've picked the number 1 company, and it's just personal bias. Nuix. I have traded this company in the past, and I should not have sold. So I am learning, trading. There was no reason for me to sell out of Nuix, and the share price is up 24% on the back of an earnings update. This is a positive earnings update. We'll have a look at the chart of this company later, but first, we should look at the Global Data Center. So I'm going to stop with Nuix. We'll go back to Nuix in a second. One of the reasons why I bought Global Data Center, apart from, there it is, I bought 236 on Thursday. One of the reasons why I bought a position in Global Data Centers is because data centers, and I'm looking for data center plays. So I do have a position in NextDC, have positions in some companies that provide services to data centers. But the other reason why I took a position in Global Data Center is just a chart. Now, I've been following this company in the chart for quite a while. So the share price moved into uptrend in April last year. So 1 year ago, share price at that point was $1.50. Now, about 1 year ago, and it would have been April, possibly on the 17th of April, the company transitioned because I said the company's assets or the company itself was undervalued based off their assets. And one of the things they did mention in this strategic review, or whatever it was called, was the possible divestments of their assets to realize value for shareholders. And that's exactly what they've done. Exactly what they've done. They've divested Perth data centers and this divestment. And just based off this chart, this has created value for shareholders and a beautiful looking chart. And this is why I bought a position in this company. And it's just fortunate, just lucky that they released this announcement. But again, one of the reasons why I bought shares in this company was a chart. The market was telling me something. I was listening to the market, and I'd say if you buy shares in uptrends, you're going to be lucky more than you're unlucky. If you buy shares that are in downtrends, more than likely you're going to be unlucky more than lucky. And you can see this company was starting to turn around when they released that announcement on the 17th of April last year. It started to turn around, and that was actually the trigger to get in. That was literally the breakout to get in. Just look at it. Beautiful breakout. And I was not following the company at that point in time. So let's get to Nuix. So as I said, this might have been a controversial call. Coming in number 2, we have Nuix. It could have come in number 1, but I'm putting my personal bias or use my personal bias as a judgment call to decide between these two companies. Initially, I was going to have both of these companies as joint one, Gentrack and Nuix, but I decided that I will rank these 1 and 2. And Nuix has come in number 2, a profit upgrade. I have been trading this company, and to be honest with you, I should never have taken profits. There was no reason for me to take profits, and I am learning. There's a few companies I've taken profits with, which I should have held on. Because there's no reason to sell. But sometimes I just like taking profits. So this is an upgrade. Where are we going here? And it was positive commentary. So you don't even have to look at the numbers. Positive commentary. Based on general positive trading into the second half, including a significant multi-year deal win, Nuix is likely to exceed its strategic target of growing statutory revenue by around 10%. So statutory EBITDA now likely to be in range of 47 to 52 million, up greater than 35% on financial year 23. So just moving in the right direction, this company, and the sentiment has definitely shifted to positive. There's nothing else you can say about Nuix right now, except let's have a look at the chart. Is this a continuation of the uptrend? Well, of course it is. Yeah. I wouldn't necessarily say this is a breakout, but look at it. Look at this chart. So I started trading this back on the 20th of July last year. Share price on that day rose 36.5%. You could have bought shares in this company at $1.10 then. Share price now $2.96. And I took profits. I forget when I took profits. Somewhere in here. I think it was like 50% profits. I forget exactly what. I should have just held on. There was a nice little buy the dip opportunity back in January. But when you look at this chart, there's nothing to complain about. In fact, this is a perfect turnaround chart. Look at that. Massive downtrend, massive negative sentiment in this company after they listed. And then we started to see, even though there was a bit of volatility here, we started to see the shift in sentiment and the change in trend in share price. And the change in trend happened in July last year. So obvious when you look at this chart. I hope it's obvious to you. It's obvious to me. And the share price kept on going up. I just took profits probably a little bit too early. And to be honest with you, there was no reason to take those profits. So good announcement from Nuix. What's the market cap of this company now? It's probably 700 million, 800 million, something like that. 957 million. Oh, why is I way off? It's almost 1 billion. I'm wondering now. So this is where I do really show my background. When I started investing, I was really focused on value, looking for value. And as soon as I see Nuix at almost 1 billion, I go, I don't know about whether there's any value in this. But chart tells me that the market thinks there's still a bit of value in this company. And in fact, you could have bought an open this morning and done fairly well. Almost, if you bought an open, you're almost up 10%. Okay, so that's Nuix. Coming in number 1, we have Gentrack. One of the first announcements of the day. Let's have a look. Was it the first announcement? Oh, I'm on the wrong day. The wrong week, in fact. Oh, Findi. No. Oh, no, I thought that was Findi. I saw the F and R. I just skipped right past the R. F and N skipped straight past the R. So was Gentrack the first announcement? It was the first at 7:30. It's understandable because Gentrack is a New Zealand-based company, and so New Zealand-based companies will release their announcements first on the ASX because they're ahead of us by time. Understandable. So if you don't understand that, I think you're in the wrong area, and maybe you should go back to school and learn about different time zones. So countries are in different time zones, and New Zealand are in a different time zone, and the sun rises earlier there than it does here. So usually we get announcements from New Zealand-based companies first, and then Australian-based companies after that. So hopefully that is clear for all of you. I'm being a little bit condescending and patronizing. Anyway, I was just joking. I'm pretty sure every single person watching this video understands all that. Okay, why am I lingering? So Gentrack up 20.67%. The low of today was 7.95. You could have bought below 8 and done fairly well. Okay, so what's happened today? Can't release the half year results. So in itself, no. Okay, what's the go here? Let's have a look at the market announcement. This is what I do. I'll go through exactly what I did with Gentrack, and I did have a little bit of a slight concern when I saw this. So revenue up 21%, up 58% when excluding some one-off revenues. EBITDA 12.3 million. That was down from last year. Statutory profit down from last year. I was like, oh, what's going on? But then I remember there was a one-off last year. So those profits and EBITDA were elevated last year. And they actually, that's what they mentioned. I think they mentioned that somewhere in the announcement. If you take away that one-off last year, pretty good result from Gentrack. So why has the market reacted? Let's have a look at probably the most important words a company can release. And we'll have a look at the presentation. They also mentioned this in the 4-page media release, which they probably should mention. But of course, CommSec is taking 6 years to open up this announcement. And it would have taken market index a split second, like 1 nanosecond to open this up. But for some reason, CommSec, which, one of the biggest companies in Australia, has really bad systems. And anyway, let's have a look at the most important part of this half-year results. No, it wasn't that. It's this. Here it is, upgrade. The most important, most powerful word a company can put into their announcement or any sort of announcement, financial results, or just one-off announcement is upgrade. Upgrade for financial year 24 revenue and EBITDA. Upgrade instantly means all those who analyze this company have to upgrade their models, and the number that spits out in terms of fair value for this company is now going to be higher than it was. That's why upgrades are powerful, particularly if it's an unexpected upgrade. And most of the times, upgrades are unexpected. They're surprising. Not all the time. On occasion, you do see an upgrade released and the market expected it. It doesn't happen all that often, but it does happen. But of course, with the share price up 20%, the market wasn't expecting an upgrade. This was a pretty good upgrade as well. So EBITDA expected to increase from between 25 to 23.5 and 26. And the revenue upgrade was pretty nice as well. 170 million now to 200 million. So pretty nice upgrade in revenue and EBITDA. And that's why the share price has increased for Gentrack. Let's have a look at the chart. So this has been a holding for me for about 4 years. I have taken profits a couple of times on the way. I bought originally way back. This is the turnaround story. So let's have a look at the daily chart. Look at the share price of Gentrack. Fell significantly in 2019 into 2020. During the COVID-19 financial panic, share price of this company fell to a low of like 75 cents. Share price sort of consolidated for a long time here. I bought shares in 2020 and just saw the share price of this company go sideways for 2 years, maybe even more than 2 years. And then the share price broke out in November 2022. And again, this should be obvious. Breakout. This was on release of good. Look where the announcement was. 29th of November. When does this company release their results? May, November. So this was on release of the results. The market was surprised by the results. Share price increased in successive days, 15% and 19.2%. And share price has kept on going up. You could have bought 2 days after that and still have done really well. You could have bought at 240 and your value in this company has tripled. 240, 480, 720, quadrupled. I have taken profits along the way. And again, should I have taken profits? There's no reason for me to take profits at all during this journey. But again, not complaining. In fact, the share price of Gentrack might be close to an all-time high. Oh, it is well above an all-time high. So you can see, even though a company does go through a period where it is trouble, and this was prior to COVID-19, the company can turn things around. Maybe new management, that sort of thing, can turn things around. And we've seen that with Gentrack. And again, this is what I'm looking for. The sort of company, a turnaround play I'm looking for. And I just want to own and hold these companies for the long term. I should never have taken profits with Gentrack at all. But I'm not complaining. But I think I can just improve. That's the whole point about what I do is I access all my trades and how can I prove what I am doing. And at this point in time, let's have a look. At this point in time, my technical portfolio is up. I'm hoping it's up 60%. Oh, 59.96%. Why not 60%? Please. And this is up 60%, even though I have made some mistakes, although Gentrack is not in here. Gentrack is in my small cap portfolio, but I'm going to combine the two because I am trading Gentrack and I just don't see any reason to sell. But I was thinking, I was showing a bit of weakness. Maybe I should take profits and completely sell out. But I decided not to because the share price was still in an uptrend. Even though share price has gone sideways for about 3 months, doesn't mean the uptrend has finished. Anyway, this video has gone on too long, but a lot to talk about today. And if you do have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.